Hey, welcome to another session of the Mortgage Masters Busting Mortgage Myths. We're going to talk about the difference between conventional and FHA appraisals today. The comparables, the way they generate them, it's almost virtually the same. The comparables are the comparables. They're going to want to compare homes that have closed within the last 6 months, typically within a mile, and they have to be like properties, meaning that the square footage has to be comparable, bedrooms, bathrooms, and also they're not going to be comparing 1 stories to 2 stories unless they absolutely have to. That's one of the things is a lot of listing agents out there have this idea in their head that FHA is stricter when it comes to values. It's actually not true. And believe it or not, it's the same appraisers doing the conventional and the FHA appraisals out there. It's not different ones that do specialize in one or the other. What's the other thing that comes up a lot, Kyle?
So one of the biggest things with FHA loans that we're looking at, they do have MPRs or minimum property requirements. So that's going to be the overall condition of the property. There are some things that FHA specifically looks at that conventional does not, but there is a workaround for that.
Yeah, and what that is basically is we do an escrow holdback. So we get a contractor, goes out, does a quote, and then at closing, we collect that amount of money. We have closed, funded, recorded. That means you as a listing agent and your seller, you're off the hook. Your seller's running off with their check, you're running off with your check, and the buyer's in their home with their family happy, and we just get the repairs done afterwards. And you as a listing agent and seller don't have to worry about any of that because you're done. Hands clean. And that's pretty much another myth busting.